Mic check, 1, 2, 3, testing, mic check. Testing, testing, mic check. Good? Testing, testing, 1, 2, 3, mic check, 1, 2, 3.
Testing, testing, 1, 2, 3. Testing, testing, 1, 2, 3. Testing, testing. Testing, 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 1, 2, 3. Testing.
The subcommittee will come to order. Welcome to the Ways and Means Subcommittee on Tax Policy. Our hearing is How Tax Reform Will Help America's Small Businesses Grow and Create New Jobs. You know, one of the things that makes Americans really charming and delightful, in my view, is that we're not a jealous people. And if you think about it, it is cooked deeply into our DNA. When we see our neighbors succeed, we say, "How nice for you." That's because we know that with hard work, that could be us, or that could be our children or our grandchildren. Unfortunately, this basic premise of the American dream, that anyone with a good idea and hard work can start a successful business, is under attack in part, not in all, but in part from an antiquated and a bloated tax code. In 1913, when the federal tax code was created, it was 400 pages long, and today it's 74,000 pages. Need I say more? Imagine that you're starting off a small business that you've always dreamed of. First off, as a pass-through entity, you should know that the IRS is planning to take 44.6% of your business income if you're a success. That's less money for you to grow your business, and it's less money for you to hire workers with. Next, you'll have to navigate through a mesmerizing array of depreciation schedules. The desk that you work at, well, you can depreciate that over 7 years, but the computer takes 5, and although the sidewalk you needed to build on customers, that'll take 15. But don't worry, though, the tree that shades the sidewalk is also on that same 15-year depreciation schedule, unless it creates fruit that you sell, and then that's 10 years. After you've figured everything out, you start turning a profit. Remember not to use all your deductions right away, because you'll need to calculate your regular tax liability, and then you do it again by calculating your alternative minimum tax, the AMT. And of course, you'll be paying whichever of those is higher. And finally, if you found a way to overcome all the obstacles that the tax code threw at you, you're going to start an estate plan right away, because if you want to leave the business to your children when you pass on, the government will be taking an additional 40% out of your business assets upon your death. And if that sounds ridiculous, it's because it is. Now, there's good news. This tax code is not a natural disaster. This is not Hurricane Katrina. This is not an event that we can't avoid. In fact, it's a problem that was created by law, and it can be changed just as simply by law. And in the Ways and Means Committee, we're proposing a simplified tax code that works with instead of against small business. First, we're proposing to drop the rate from 44.6% to 25%. This means more money to hire employees, and it means more money to grow a business. Then we simplify the tax code in 3 main ways. We eliminate the nonsensical depreciation schedules and replace them with immediate expensing. So, when you buy equipment for your business, you write it off, all of it, that year. Then we eliminate the AMT so that businesses can know exactly what they owe without having to worry about a second hidden tax code. And finally, we abolish the death tax so that families are never forced again to find a way to pay a 40% tax on their business, or worse yet, sell it off to pay the tax. Clearly, tax reform is not a simple task. It's not for the faint of heart, and there are questions that still remain. The Ways and Means Committee has been hard at work trying to figure out the fairest way to define business income, for example, so that companies are taxed fairly. Additionally, as many small businesses already take advantage of immediate expensing through Section 179, the committee is developing rules to allow small businesses to continue to deduct their interest payments on business-related debt. With this in mind, I'm pleased to welcome our witnesses, and I look forward to hearing from all 4 of you this morning, and I know I speak on behalf of the entire subcommittee when we say thank you for your time. We're interested in trying to create the best tax code that we can, members on both sides of the aisle, and toward that end, I now yield to the distinguished ranking member from Texas, Mr. Doggett, for the purpose of an opening statement.
Thank you so much, Mr. Chairman. It is very good that we can finally hold the inaugural meeting of this subcommittee under your leadership. I thank you for responding to my letter requesting that the subcommittee actually do something this year, and I would ask unanimous consent to make that letter requesting hearings a part of the record.
Without objection, so ordered.
I know you plan to hold an additional hearing next week, a final hearing before the August recess concerning individual tax, which is good. But there are a number of additional topics that are included in that letter that deserve this subcommittee's thorough evaluation, and I hope we can do that as well. More than 1 full year after the announcement of the Republican self-styled Better Way tax blueprint, it is rather late that we convene. if the true goal is to enact genuine, comprehensive tax reform during the few legislative days that remain in the waning months of this year. We do have agreement that small business is a good place for this committee to begin in this first hearing, because so often the Congress has riddled in the many pages of the tax code to which you refer, has riddled that tax code with provisions that reward the giant enterprises that regularly fill this very room with lobbyists, and it often neglects the small businesses whose owners are usually too busy to even come to Washington because they're trying to make a go of their business. These are the businesses that I represent. They don't have offshore accounts, they don't have foreign subsidiaries, and they aren't concerned about whether they will renounce their American citizenship. I believe we should be taking a close look at the preferences, the schemes, the shenanigans that are used to shift the tax burden to small businesses and individuals, while many large multinationals on some of their income through earnings stripping don't pay any taxes or next to nothing. I believe that we should be seeking common bipartisan ground behind genuine tax reform that is designed to encourage entrepreneurship, support small businesses, and grow jobs here in America. I represent a part of Texas in which small business is vital. It's the part of Texas that doesn't consider having a taco truck on every corner a political insult as intended, but rather a practical convenience. It's a place where we have many valued traditional small businesses, restaurants, tire shops, construction contractors, but also in both Austin and San Antonio, we have a growing number of incubators and accelerators, places like Capital Factory and Geekdom, with a wide range of high-tech startups that are creating our economic future right now. As we look at how to encourage the advancement of these very type of small businesses, I think it's important to abide by certain principles. The first of these is that we not finance a tax cut by borrowing from abroad, by asking the Chinese and the Saudis to finance our tax cut. We know that there are mythological statements that are made about how all these tax cuts will pay for themselves. They're just never borne out by history, and they're not even borne out by the Republican economists like Douglas Holtz-Aiken, who have testified before this committee. Second, I think it's important to not tilt the playing field even further to advantage some businesses over others. We should avoid picking winners and losers. More tax breaks for the large, profitable multinationals that already pay at times only single digits doesn't help small businesses. It's basically just not fair when Pfizer, with its 181 subsidiaries and tax havens, pays a lower tax rate than Davila Pharmacy that I represent on the west side of San Antonio. Finally, I think in tax reform, it's important that we not widen the growing income gap in this country. And in that regard, as we look at the specifics of today's hearing, we do want parity for all businesses, but we don't want to create new loopholes. Not all those that benefit from pass-throughs are genuinely small businesses. Many of them are connected to Wall Street, to some of the wealthiest people in the country. They provide opportunities for even Donald Trump to pay less taxes if that's possible. And so we need to look carefully at the proposals that the Republicans are advancing to ensure they accomplish the objective that we share of advancing small business. And I thank you, Mr. Chairman.
Thank you, Mr. Doggett. You know, on these points that you made, not borrowing from abroad, don't tilt the playing field, and don't widen the income gap, I think that there's a lot of interest on both sides of the aisle. And I think that there, in particular, we're going to hear today from witnesses who can tell us their own journeys as it relates to entrepreneurship, barriers to entry, and so forth. So let's let the show begin. Today's panel includes 4 experts. Teresa Mears is president of DGG Uniform and Work Apparel. I'd like to yield to the gentlelady from South Dakota to introduce our next witness.
Well, thank you, Mr. Chairman, and I would like to introduce Mr. Scott Vanderwall today, who will be testifying. He's from the great and wonderful and beautiful state of South Dakota, so we're thrilled that he's here. Scott is a third-generation family farmer in the state of South Dakota who lives just down the road from me. It's actually about 30 miles away, but in South Dakota, that's still neighbors. For us, Scott has been a real leader on a lot of issues. He's the president of the South Dakota Farm Bureau. He's vice president of the American Farm Bureau Federation. And he also works with his dad, his uncle, and his son in his family operation. Mr. Chairman, we all eat and we pay taxes and in one form or another. And as we dig further into the problems that the tax code presents for all of us and that tax code that we live under, Scott is here to give us a perspective of someone who grows what we all eat. And so thank you for joining us today, Scott, and I really look forward to your testimony. I yield back, Mr. Chairman.
Thank you, Ms. Noem. Next, Rebecca Bainick is Chief Executive Officer of Neutral Posture. And finally, Chai-Ching Wang is Deputy Director of Federal Tax Policy at the Center on Budget and Policy Priorities. The committee has received your written statements, and they're all made part of the formal hearing record. You each have 5 minutes for your oral remarks. Let's begin with you, Ms. Mears.
Thank you, Chairman Roscom and Ranking Member Doggett and all the members of the Committee on Ways and Means Subcommittee on Tax Policy for hosting this hearing. My name is Teresa Mears, and it is my honor to be here with you today to share my experiences. I am a small business owner 2 times over, the mother of a 13-year-old small business owner, and on July 1st, I completed my year tenure as the chair for NAWBO, the National Association of Women Business Owners, where we represent the 10+ million women businesses in this country. NAWBO was founded in 1975 to be the first advocacy organization for all women business owners, and we are proud to represent one of the fastest growing segments of the economy today. My company, DGG Uniform and Work Apparel, is a growing company where in the last 6 months I've hired 5 new employees. Before I get into details of my current company and my experience as the chair for NAWBO, let me give you a little bit of history about me and my business experience. As I am a retired law enforcement from Florida where I spent 20 years serving my community. In 2006, I bought an exclusive distributorship for certain law enforcement products. I obtained the capital through an SBA 7A loan, and I purchased 2 business condos with an SBA 504 loan. My husband and I used our retirement for the down payment and for capital to build our company. We quickly grew our company, and when we expanded our product line in 2007, we had made over $1 million in revenue within the first year. We went from 1 employee to 28 in 2 years, and then within 5 years, we'd grown our revenue to over $15 million. We were pleased with the expansion, but the initial capital of our retirement was in no way to support our immediate and rapid growth. We'd already had the SBA loans to start, so cash was hard to come by, and we had to try to self-fund our capital needs. We survived, but it was not easy. Last year, I was fortunate enough to sell that company, and then I launched a uniform and clothing line. We, again, have experienced fast growth, and although I'm determined to develop this company at a more controlled pace, I need to have the ability to support this long term. Tax reform focused on allowing small businesses to keep more cash is the place to start. As I cultivate this business, some things that affected me with my previous venture are on my mind. The complicated nature of the tax code led to misunderstandings and confusion. For example, the ability to use or not to use certain deductions in order to generate cash back into my company. As a result, I overpaid taxes during those critical years when I needed cash flow to support my growth. I survived these challenges with my previous business, but now I find myself in a very similar place. The challenges I faced then are very much looming in front of me, and I want the tax to be reasonable where I can capitalize for my business, and I want to support this great country at the same time. With my current projections, a 10% reduction in a tax rate alone in the next 2 years would allow me to save $10,500 on the first year and then $50,000 in the second year. This will allow me to reinvest back into my company, and within the 4th year, I would end up paying a higher tax at a lower rate due to my higher net margins, instead of a lower tax at a higher rate due to the net margins from the lack of growth. Small businesses are the backbone of America, and we are the ones that generate new employment numbers and stimulate our economy. And as such, we should also be the focus when discussing how to best reform the tax code. I spent the last year traveling nationally and internationally as the NAWBO chair to meet with small women-owned businesses, and here are some of the discussions that are occurring. Lower taxes. Small businesses need to have a lower tax rate so we can focus on investing in our companies. We work hard and long hours, and we are usually the first one to sacrifice when cuts need to be made. Many small business owners pay everyone and everything first, and then they look to see what's left at the end. The NAWBO 2017 membership survey revealed that more than a third of women business owners who responded work between 40 to 49 hours a week. More than half have carried business costs on a personal credit card, and nearly 1/3 have never given themselves a raise. Lowering taxes and incentivizing small business ownership can create jobs and support the continued growth of small businesses. Those of us who have to purchase equipment to run and support our productions within our business need to utilize the use of fully writing off this expense. Not having the benefit to write off the full cost of the machinery on top of paying a higher tax is definitely going to slow our growth. Women are resourceful, but as statistics have told us, more risk adverse. Imagine what power and growth we could unleash if they had a little more faith and believed that they would not crumble under the challenges faced by companies who grow and add employees. Having a tax code that focuses on lower and straightforward tax laws would benefit and reward them instead of scaring them away. Thank you again for hosting this hearing and encouraging this conversation.
Thank you, Ms. Mears. Mr. Vanderwall.
Chairman Roskin. Apologize for that. Chairman Roscom, Ranking Member Doggett, and members of the subcommittee, thank you so much for holding this hearing about tax reform and small business this morning. I appreciate the opportunity to speak to you about the importance of tax reform in our farm and ranch business. My name is Scott Vanderwall, and I, along with my father, my uncle, and son, operate Vanderwall Farms in Volga, South Dakota. We farm 1,300 acres of corn and soybeans. We operate a beef cattle feedlot where cattle are prepared for market and harvest crops for neighboring farmers. Well, Representative Noem mentioned that I'm the third generation in our farm. I'd like you to know that my son is the fourth, and he and his wife had a baby girl back in November who we certainly hope has a chance to farm if she chooses when she grows up. So that's certainly an important thing to us. Before I discuss tax reform, I'd like to emphasize the importance of agriculture to our nation's economy and talk about our business environment. Collectively, agriculture, food, and related industries contributed $992 billion to U.S. domestic gross product in 2015. Agriculture and its related industries provide about 11% of U.S. employment. The vast majority of farms are family-owned and share several things, including that they operate in a world of uncertainty, from unpredictable commodity and product markets to fluctuating input prices, from uncontrollable weather to insect or disease outbreaks. Running a farm or ranch business is challenging under the best of circumstances. Farmers and ranchers operate under tight profit margins, often for rates of return that are modest compared to other businesses. Our businesses are also cyclical, where a period of prosperity can be followed by one or more unprofitable years. We are now in a serious economic downturn, with net farm income falling by nearly half since 2011. Farmers and ranchers need permanent tax reform that recognizes the financial challenges we face. We need tax policies that support high risk, high input, capital intensive businesses. We need a tax code that allows us to match income with expenses and helps us to even out high and low income years. Reducing effective tax rates is the most important thing that tax reform can do to boost farm and ranch businesses. Every dollar that we pay in taxes is a dollar that could be reinvested back into our farm. Any investment we make will not only be good for our farm business, but will lift our communities and contribute to a robust ag economy. While lower tax rates are important, the critical measure of any tax reform plan for farmers and ranchers will be the effective tax rates that we pay. Because profit margins in farming and ranching are tight right now, we are more likely to fall into lower tax brackets. But tax reform plans that fail to factor in the impact of loss deductions, credits, and exemptions for all rate brackets could result in a tax increase for agriculture and for businesses in general. Because farms, including ours, have high production input costs, it's especially helpful to be able to immediately write off the cost of equipment and production supplies. With the price of a large combine and a couple of headers topping well over $500,000, it's easy to appreciate how expensing helps our farm business to cash flow. Immediate expensing frees up cash so that we can upgrade equipment, replace livestock, buy production supplies for next season, and expand our businesses, or, probably most importantly, hire farm workers and provide employment. Debt service is an ongoing and significant cost of doing business for the vast majority of farmers and ranchers who, like my family, depend on borrowing to buy property, equipment, and production inputs. If my family can't deduct interest, it'll make it more expensive for our farm to borrow or could restrict the amount we can borrow. During the difficult economic times we now face, the ability to borrow money is more critical than ever. I also worry about beginning farmers like my son, who rely more heavily on debt financing than we do. I know from talking to other farmers and ranchers across the country just how worried they are that their businesses will die with them because of estate taxes. For farms and ranches like ours that are currently under the estate tax exemption, the repeal of stepped-up basis would create new and substantial capital gains taxes. While lower capital gains rates encourage investment, the tax can still discourage property transfers. As my family plans for transfer of our farm from one generation to the next, we're struggling with the impact that capital gains taxes are having on the transfer of that business property. Lastly, I'd like to mention that cash accounting gives farmers the ability we need to plan for major business investments, and in many cases provides guaranteed availability of some ag inputs. Also, like-kind exchanges, or 1031s, help farmers and ranchers buy land and upgrade business assets. I'd like to thank you again for the opportunity to visit with you today about the importance of tax reform and how it will help America's small businesses, including farms and ranches, to grow and create jobs. And I'd be happy to answer your questions. Thank you.
Thank you, Mr. Vanderwall. Ms. Banick?
Good morning, Mr. Chairman and members of the committee. My name is Rebecca Banick. I'm the CEO of Neutral Posture. And in 1989, my mother and I started our business together. I'm here today representing myself, my family, my employees, and my business. When we started the company out of my garage, we raised money to get started, we worked hard, and we developed an office chair based on my dad's expertise in ergonomics. 2 years later, as our business was gaining steam, we discovered an unwelcome surprise. We got a call from our accountant, said we owed $86,000 in taxes. It wasn't because of ill intent, it was just because the tax code was very confusing, and we didn't understand that we couldn't write off inventory as an expense. We figured we'd paid for it, so it must be an expense. But that's not the way the system works. It has to count as an asset instead. So that cost us $86,000 in taxes that we weren't planning on paying at that time. Fortunately, we were able to expand quickly enough to recover the unexpected cost. Other small startups are not as lucky. Almost 30 years later, we have 130 people, including almost 90 at our factory in Texas, and 60 representatives across the US, Canada, and Puerto Rico. About a third of our income comes from the chair that my father developed, the Neutral Posture Series, which is a high-end, task-intensive ergonomic chair. These chairs are the most comfortable chairs in the world and probably a little more comfortable than the ones that you're sitting in now. For a small manufacturer like us, it's clear our tax code has been broken for many years. We're due for an overhaul, one that closely resembles the plan that's been laid out by this committee. If Washington is serious about strengthening the American economy, it is time to enact a plan that will level the playing field for all American businesses by encouraging investment and job creation. Piecemeal efforts won't get us there, won't get us what we need. We need comprehensive and permanent tax reform, and we need it now. It begins with treating small businesses the same as we do large corporations, or at least getting as close to parity as we can. According to the SBA Office of Advocacy, the 28.8 million small businesses in this country, nearly half of the employer firms are organized as S corporations, and 11% are sole proprietorships. Of the ones that are sole proprietorships, 86.4%, those are those sole proprietorships. All of these companies use the pass-through rate, which is the individual rate. As with many small businesses, the S corporation taxes have worked pretty well, but there's so many different things that are convoluted about it that it's so difficult to be able to understand the code. For example, my personal tax return is 79 pages long. I have no idea what most of it says, but I have to sign my name to it saying that I agree with everything that's in there. The complexity is coupled with higher taxes. The 35% tax rate that's imposed on corporations is one of the highest in the world, but S corporations like mine pay an even higher rate, 39.6% or more. According to the Tax Foundation, on the federal level, pass-through businesses are subject to the top marginal rate of 44.6%. That means in most U.S. states, the pass-through rate can exceed 47%. So as a small business owner, that's almost 50% of every dollar you earn, you're turning around and paying in taxes. A recent study by Women Impacting Public Policy highlighted the fact that women-owned businesses miss out on more than $255 billion and tax incentives because of the industries they're in or the way that they form their corporations. Cutting the corporate tax is badly needed, but rates need to come down for all businesses regardless of how they are organized. The goal should be to allow entrepreneurs to keep more of their earnings so they have the ability to reinvest the profits, increase output, and hire more workers. We shouldn't stop there. In the furniture industry, we face heavy competition from foreign importers. Companies that sell cheaper, less reliable products from companies like China import those products with a significant tax advantage. Eliminating the foreign goods subsidy and allowing American producers to write off capital investments more quickly would help companies like mine. Another challenge facing small businesses is the estate tax. If someone happens to claim a significant share of a family-owned small business as an asset, the heirs to that asset can potentially be penalized to the point that the company no longer survives. In our case, my mother, my partner, owns 44% of the business. If she were to pass away, we would be unable to pay the ensuing taxes. That's right. After you clear all the other hurdles and create a successful business, the estate tax jeopardizes passing it on to future generations. The estate tax amounts to double jeopardy and income on assets that have already been taxed, and it should be eliminated permanently. In conclusion, I'm recommending equal tax treatment for businesses, no matter how they are formed, elimination of the estate tax, and simplification of the tax code for everyone. And these changes need to be permanent. Small businesses cannot plan for the future with a changing tax code. Mr. Chairman, thank you again for bringing this issue to light. We look forward to working with you, and I'm happy to answer any questions.
Thank you, Ms. Banick. Ms. Huang?
Chairman Roscom, Ranking Member Doggett, and members of the subcommittee, thank you for the opportunity to testify here today. My name is Chai-Ching Huang, and I'm the Deputy Director of the Centre on Budget and Policy Priorities. And we absolutely agree that how tax reform affects small businesses and their employees is very important. I'd like to offer 5 points on that issue. First is that a special rate for pass-through businesses would overwhelmingly benefit the wealthy and tax avoiders and not typical small businesses. Pass-through business income is claimed on individual tax returns and currently taxed at the same rate as salaries. The administration and Better Way tax plans both cut the top rates on pass-through income. They cut it from 39.6% to 15% and 25% respectively, and that's well below the plan's proposed top tax rate on salaries. The benefits of cutting that rate would go overwhelmingly to the wealthy. The country's 400 highest income individuals would get average tax cuts of $9 million each year. And more than 2/3 of that tax cut would go to millionaires. And that's because pass-through income is highly concentrated among big businesses and high-income households, hedge fund managers, consultants, investment bankers, lawyers, and the like. Plus, the tax cut would lose more than $500 billion over the next 10 years purely due to tax avoidance. High-earning executives and professionals would have a major incentive to reclassify their salaries as business income in order to get the lower rate. Meanwhile, cutting the top pass-through rates wouldn't help most small businesses, which are in fact small. So almost 70% of households with pass-through business income are already taxed at a lower statutory marginal rate of 15% or below, and as we've heard, many farm businesses already face those lower rates. Second, and similarly, repealing the estate tax would not be a boon to most small businesses, but to the heirs of the wealthiest estates in the country. Only about 50 small business estates face any tax each year, and those that do face an effective rate of 6%. And that's mostly because the first $11 million in assets per couple is entirely exempt from the tax. So repealing the tax would benefit the heirs of only the wealthiest 2 of every 1,000 estates. Third, we can learn a lesson from the failed tax cut experiment in the state of Kansas. Kansas enacted large tax cuts, highly skewed to the top, including special treatment for pass-throughs. And since that took effect, Kansas lagged the nation in small business job growth, overall employment growth, and economic growth. To address the deficits fueled by those tax cuts, Kansas cut investments that help communities and businesses thrive, including delaying road repairs and underfunding schools. And last month, a bipartisan supermajority of the Kansas legislature reversed most of those tax cuts. My fourth point is that, like the Kansas plan, the administration and Better Way tax plans propose large deficit-increasing tax cuts, mostly for the wealthy and large businesses, even beyond the pass-through and estate tax proposals. And paying for them, either sooner or later, could mean harm to education, infrastructure, and other federal investments that are critical to the economy and to small businesses. Fifth, I'd like to note that the tax provisions in the House and Senate health bills would hurt small businesses. These are big tax plans, and they slash the tax credits that help people buy health insurance in the individual marketplace and cover their out-of-pocket costs. Small business owners and their employees disproportionately buy insurance in the marketplace, so they would be disproportionately hurt by increased premiums, losses of coverage, and increased out-of-pocket costs. The bills could also discourage people from starting a small business. Health reform allowed many Americans to buy affordable quality coverage in the marketplace independent of an employer, and that makes it less costly and less risky for people, especially those with pre-existing conditions, to change jobs and to start their own small business. The House and Senate bills would reverse those gains, and they would do so in large part to pay for tax cuts that again go mostly to the wealthy and to large drug companies, large insurance companies, and other corporations. Thank you again for the opportunity to be here today, and I look forward to your questions.
Thank you all very much. We really appreciate your testimony. Now we'll invite the members to inquire, and I'll yield to Mr. Reichert from Washington.
Thank you, Mr. Chairman. Thanks to all the witnesses for being here today and sharing your testimony. I want to direct my questions toward Ms. Mears. As we talked before the hearing, I can really relate to your testimony. You and I have taken what we've learned in our years in law enforcement to serve our communities in a new way. And there are a couple of things that I've learned in my law enforcement career and here in Congress is that perseverance is one of those attributes that helps me be successful here, and also a very keen attention to facts. And I know that you have those same two qualities, and they are needed desperately for you, I know, to be successful in the operation of your small business. So I've admired how you've used your skills from your 20 years of law enforcement, so thank you for your service to your community in that regard. So just a couple of questions. First, could you describe the biggest challenges you faced when setting up your business?
The biggest challenge that I faced, I'm sorry, finish the last part. I didn't.
When you set up the business, when you started.
When I set up so the biggest challenge that I faced was two-part, and that was adding employees. For me, also meant adding equipment. So if I add a sewing machine or embroidery machine, or I added an outside salesperson and I had to purchase samples in order for the person to go visit customers, it's twofold. I'm buying items for my company, and I'm also hiring an employee to go with those items, and vice versa. If I find myself growing at a fast rate, which is something that I faced both times, I have to build that infrastructure before I get to the point where the revenue supports it. And I probably don't fall in that risk-adverse category, obviously. So I have to make those expenses prior to having the revenue support it. So the biggest challenge that I have is being able to fund the employees that I have to hire to support the growth and infrastructure that I have, and then also get the equipment to go with it, because they need a computer and a desk and a chair and other products to support the job.
And is there anything that you could identify today as an update in the tax code that could have helped you in that transition in acquiring property and hiring employees?
Yeah, as I referenced, I think the ability to write off more or write off the full expense of the items that we are buying and paying cash for in that year would definitely help me reinvest. In fact, if I am able to write off some of the larger machines that I purchase, that can actually support a part-time person to run the machine at the same time.
Okay. And then the last question I want to have you focus on is, now that you are starting your second business, or you're in the middle of your second business, and you've mentioned some things already as far as what can best help you now continue to grow your business, a simplified tax code, a lower tax rate. I want to give you a couple minutes to expand on those ideas, and if there's any other thoughts that you might be able to provide, and how we might better assist you in the tax code in growing your business.
So I think one of the things, obviously, cash is king, and when you're growing a business, you don't have it. It's just not there.
Yeah.
And so you have to be very creative. You have to have that perseverance, and you have to have the attention to detail. And one little slip, as Rebecca had mentioned, one little slip, and a lot of businesses may not survive. That $86,000 tax bill that she had, there's a lot of businesses that wouldn't survive that. I actually had that happen to me, and I wasn't sure I was going to survive it. So having to make payments and pay our taxes on the revenue that we are earning while we're trying to grow our business within the same year, having to make those tax payments on any revenue or profit that we make is what is scaring me as I grow my business. Because right now, I'm not as challenged, but I know from my previous venture that as I grow into the more multiple millions of dollars and I continue to earn the revenue, having to pay that tax up front on top of hiring a new person, bringing into the equipment, any marketing, any funds that I need to support that, at the end of the day, there's just nothing left for me and my family.
So very quickly, Mr. Chairman, this committee is focused on trying to create an opportunity for businesses to grow, and I think you'll find that as a bipartisan effort. Mr. Kind and I are working on two bills that hopefully will help. Mr. Kind and I have also introduced legislation to promote employee ownership and provide greater retirement security through legislation that encourages the creation of more S-corporation ESOPs. And I don't have time to go into the second bill, but I yield back. Thank you. Thank you for your testimony.
Mr. Doggett.
Thank you so much, Mr. Chairman. I believe that each of our witnesses has offered valuable insights. The fact that we have differing opinions on these issues and we can have them discussed here is how we eventually perfect where we need to be. I am disappointed that John Ahrensmeyer, representing the small business majority, was denied an opportunity to testify today. I believe that it is important to continue, particularly given the lateness of our endeavors here, to have the most diverse points of view reflected here as we consider this, and I will continue respectfully urging that as we have other hearings. Ms. Mears, I agree with you that depreciation schedules can be confusing and that it's helpful to small business to be able to expense capital investments. As you are, I'm no doubt aware, under Section 179, small businesses can already expense $500,000 every year, which is a lot of sewing machines, even though I'm sure yours is not the kind that my wife has. I think that being able to expense every year $500,000 is a good step forward. Our depreciation schedules may need to be reviewed, but the idea that every manufacturer in the country can expense every dollar of capital investment is a rather radical change in our tax code and one that I have some concern about. I don't think that it would benefit small business in any way because the small businesses can already automatically expense. Mr. Vanderwall, I particularly agree with the concerns that you expressed that the trade-off for automatic expensing for the very largest companies in the country would be to deny interest expense on debt for farmers and ranchers and many of the small businesses that I represent. You know, when I go out and meet with the Southside Chamber of Commerce in San Antonio or the Hispanic Chamber in Austin, what I'm hearing from these small businesses is one of the major obstacles they face to growth is access to capital. They work with the SBA or they work with an independent bank or with groups that we have there like People Fund and Lift Fund to try to get access to capital. And the notion that having gotten access to capital for these small businesses that they won't be able to deduct the interest on their loans, I think will have big impact. I believe that there is a debt bias in our tax code, but to go again to a radical step of saying we're not going to permit these interest deductions because we'll have automatic expensing, I find to be very problematic. And Ms. Bainick, I appreciate your reference to the Tax Foundation. This is a group that is viewed here, I think, as being a Republican-leaning group, but I think that it offers a lot of wisdom about the pass-through. I believe and share your view that we need equal tax treatment for all companies, but it is the Tax Foundation itself, the source that you mentioned, that has said, quote, the pass-through carve-out primarily incentivizes tax avoidance, not job creation. In fact, nearly a third of the estimated cost of this tax break would come from the tax dodging bonanza that would follow it. And just to give you an example, while you're here as small businesses, one of the companies that is entitled to a pass-through is somebody that I respect very much, and that's Michael Bloomberg. He was interviewed recently on 60 Minutes. He apparently has been so successful, he's the 8th richest man in the world, but he doesn't have a corporation. He has a partnership that passes through his income. I think he's now worth $47 billion. And so when we make decisions about pass-throughs, we're not just talking about mom and pop enterprises, we're talking about very wealthy individuals, and if there aren't safeguards in there, this will just become the latest way that some people avoid paying the fair share of taxes that they are entitled, that they should be doing to finance our national security. Ms. Wong, I would just ask you if having additional tax breaks, a territorial system, for example, will be of any benefit to small businesses.
So a territorial tax system, simply put, means a rate of 0 on multinationals' foreign profits. And that would be of no benefit whatsoever to domestic or small businesses and could in fact hurt them. And this is a key proposal that is in President Trump's current tax plan. The problem is that it would give those multinationals a big incentive to artificially shift their profits offshore in order to get that 0 tax rate. That puts them at a competitive advantage to domestic and small businesses who don't have access to high-priced lawyers, who don't have foreign subsidiaries, and who don't want to engage in tax avoidance as a business strategy.
Thank you, Ms. Wong. Mr. T-Berry.
Thank you, Mr. Chairman. Congratulations on putting a great panel together of 4 really good folks. Really appreciate all your testimony. Ms. Wong, love your accent. Testimony, not so much. It reminded me of a conversation I had recently with a constituent of mine who came to America with his parents, born overseas, came to America with his parents when he was 6 years old, first in his family to go to college, started a small business in his late 20s. And he said to me recently, he said to me, I cannot believe today that I pay over half my income in income taxes. He said, Congressman, I'm not including any other taxes. I'm not including payroll taxes. I'm not including real estate taxes. I'm not including workers' comp. I'm talking over 50% of my income goes to the federal, the state, and local government. No one helped me when I started my business. I had all the risks. Nobody else shared in the risks. And when you take over half of what I make, I can't grow my business. And so I look at the bios, Mr. Chairman, and I see 3 bios of 3 people who put it all on the line, and no disrespect, Ms. Wong, an academic. So it reminds me of when I first started my own business. I was a realtor. First time in my life that I had to write a check every quarter to the IRS. First time. I didn't know that. I never knew that before. I was starting to work when I was 16 years old. And as a realtor, Ms. Basic, I learned the value of uncertainty. That wasn't a very good thing to learn, but I didn't know it as a rank and file employee, but as the business owner, as a realtor, the uncertainty of regulations changing at the state and local and federal level, and then the uncertainty of the tax code, again, at the local, state, and federal level. And you talked about that unexpected tax bill. I remember my dad telling me when I took my first job at McDonald's, don't let the tax code stop you from doing the right thing. And that is continuing to try to make more money, despite the fact that the government's taking this money, my immigrant father, and don't let it stop you from saving and investing, despite whatever the tax code might tell you. And you three have not let it stop you. You haven't let the tax code stop you. My question, Ms. Basic, is, and you had a really great story, is in your written testimony, you talked about permanency in your verbal testimony. That certainty and that permanency, what does it mean for you as a small business owner?
Well, it's very hard to plan when you're looking forward if you don't know what the tax code's going to be. We made a huge multi-million-dollar acquisition a couple of years ago, and even though there is a $500,000 a year ability to write that off, we didn't have the ability to write off everything because of the fact that it was a multi-million-dollar acquisition. And so every year we're dealing with, well, how much depreciation and amortization do we really have? It's close to $400,000 right now. And the interest expense, that's very scary for me. If the interest expense deduction is taken away, I think it will be very much of an impediment to small businesses to go out and take loans out, to borrow money to help their businesses if you can't write off the expense. Because it's not just what you bought your house for. If you buy a $100,000 house, you end up paying $200,000 for it over time because of the interest. So what I paid for the acquisition and my costs are going to be two very different things because of the interest that I have to pay. So knowing what the tax code is going to be and making these things permanent is a big deal.
Thank you.
I mean, the tax code going back and forth with the state tax a couple of years ago, those are the kinds of things that are just very confusing for small businesses.
Quick answer, Ms. Mears and Mr. Vanderwall. Tell me what you think when people say that cutting your taxes only impacts the wealthy. Do you feel wealthy? Is it offensive to compare you with, let's say, a billionaire?
I wrote a note when you said it was don't focus too much on, you always say the 1%, the minority hurting the majority. And my testimony, I believe I wrote, I've met a lot of small businesses and their owners are not sailing around on yachts. We're all out there in the trenches with the shovel, digging the hole, trying to make it every day.
Thank you.
Just quickly, Mr. Vanderwall.
Okay, thank you, sir. I would just answer that question by saying farms and ranches are always property rich but cash poor. And so I don't feel rich most of the time. I would also say that private business, small businesses are what built this country and will continue to make this country prosperous. Thank you.
Mr. Larson.
Thank you, and I agree we have some stellar witnesses today, and I thank them. I would also add, Mr. Chairman, that I hope, and I want to echo the sentiments of Mr. Doggett, that inasmuch as this is our first hearing, I hope that we intensify the hearing so that we have an opportunity to discuss what are very important issues to the American citizens if we're going to get, and I think Mrs. Bonig said it best, if we're going to have comprehensive tax reform that benefits everybody, it's long overdue and we have to do it now. There's great bipartisan cooperation, contrary to a lot of popular belief in what you might hear, and an awful lot of mutual sentiment that exists on this committee. So I think both from the perspective of the public hearings and also the informal hearings that we might be able to have as well, I think it's vitally important if we're going to achieve that goal that we have it this year. That we get at it and have more hearings and also more informal discussion as well. Let me commend, I'm a small business owner myself, and so I certainly know what it means to meet a payroll, and certainly I think Mr. Teaberry outlined very well what happens when you're in a small business and a number of decisions that you're confronted with. Mrs. Mears, I'm particularly was impressed with one thing you said, and going through that whole scenario of what that would mean is that it meant for greater growth at the end of the day, and in fact paying more in terms of an effective tax rate and employing more people. And that is the engine of small business. That's what it does, and as all of you have indicated, you are the backbone of the country. But I just want to ask one question. Again, you're going to hear us talk about on this side of it, not only that we want a tax code that's revenue neutral, but distributionally neutral or fair. And I think just a yes or no answer, because I think I can anticipate what the answer will be, you would want the same thing. And as Warren Buffett has said, he wants to make sure in the distribution of taxes that his secretary, and I'm sure it applies to you with all of your workforce, isn't unfairly impacted by any tax reform. Would that be the case? Ms. Mears? Yes. I'm sure that would be the answer, et cetera. And that's why it's also important to have an academic as part of the testimony as well. So, Ms. Wang, what I'd like to ask you in a follow-up to where Mr. Doggett was going, but your sense so far, given your knowledge of President Trump's tax proposal, how do you think that stands in terms of its fairness, and how do you think that plan would be judged in terms of the fairness in terms of distribution?
So the President in his inaugural speech said that he would make decisions on tax reform that would focus on workers and American families. And his Secretary of Treasury has said that there would be no net tax cut for what he called the upper class. Unfortunately, everything that we've seen in terms of actual detailed policy goes in quite the opposite direction. We're looking at a plan that sends about half of its tax cuts to the top, to people that have incomes of above $1 million a year. And many of those tax cuts are focused on large corporations through this territorial tax system, and also cuts in the top rate.
Well, and my next door neighbor is a farmer. They've been farming the same piece of property since the 1640s. Our colleague Mike Thompson has a bill that I know he's going to ask you, Mr. Vander Wal, a question about, but I just, again, wanted to point out the respect that I have for farmers and all small businesses in general because of what you have to go through. But I hope you can appreciate the deep and abiding concern about the distribution. As been mentioned before, and I would again ask from an academic pass-through, is our pass-throughs equally distributed? And how do we ensure that the people richly deserving or who it will have no effect on get the kind of tax relief that they need, and the workforce that they employ gets the fairness out of the code, not finding that the very safety nets that they rely on, Medicaid and Medicare, are being used to fund a tax cut that you may not necessarily need, but goes to advantage the nation's 1%.
Absolutely. So the people who would benefit the most are the very highest income households in the country. And we're talking about the top 400 taxpayers who, on average, have incomes of $300 million a year each. Those are the ones that would be receiving tax cuts of $9 million a year. So this is not very well targeted towards the sorts of businesses that are struggling and growing, many of them who have tax rates already below 15%, already below 25%, which is where the Better Way plan would cut the rate.
Thank you, Ms. Wang.
I thank the chairman for allowing her the ability to finish this.
Mr. Kelly?
Thank you, Chairman. Well, first of all, thank you all for being here, especially the three business owners, because I know you're taking time out of the day that you will be using to actually make your businesses work, something that sometimes people forget about. But one of the things that I noticed in your testimony, and I know this, I'm also a small business person. I come from the private sector, thank God, because you're never able to operate your business the way government operates. It's just impossible to do. But let me ask you this, because we all have this partner who participates in almost everything we do, whether it's at the local level, the state level, or the federal level. We have a partner who's constantly coming in and draining down our revenues. And I thought it was interesting, Ms. Mears, you said in your testimony, I survived these challenges in my previous business, but I now find myself in the same place growing a small business. The challenges I face for the first time are still very much looming in front of me. I still utilize my tax attorney, and I have a new CPA. Is there any one of you that does your taxes by yourself? Yeah. Is there any reason why you wouldn't? I mean, other than being afraid that you're not paying the right amount, I can just tell you, I've always told our CPA, listen, I want to pay every penny I owe, but not a penny more than that, because the penny I save actually goes into the operation of the business. The three of you, when it comes to paydays, how many times have you paid everybody else in the organization with the exception of yourself?
A lot.
A lot? Mr. Vanderbilt, same? Ms. Mears?
Yeah, absolutely, a lot. And our survey shows that as well, is that a lot of people will not give themselves a raise and take the cut. So.
Yeah. Well, the purpose of today's hearing, by the way, is what can we do to affect pro-growth tax reform that allows you to go ahead looking to the future and saying, you know what, I can do something today that's going to allow me to grow the business. And I'm assuming growing the business also includes hiring people, increasing the number of people working for you. And too many times in our country, I think, you know, we invent great things here, but we manufacture them overseas. Now, we don't manufacture them overseas because we don't like the country we live in. We manufacture them overseas because we can't produce them profitably at home. We've actually forced people off our shores and then blame them for leaving. I mean, this has been an incredible thing for me to watch. So when I see what we're trying to do today, say, okay, what could we do today? Because I got to tell you, I opened my own mail at the dealership, and the one thing that I always hated opening was anything that had a government label on. I said, oh my God, what do they want today, and what are they going to take from me, or what are they going to regulate, and how much is it going to drive the cost of my operation? And that's the thing that I think is stunning. In addition to the taxes you pay in your profits, would you please explain to other people what other taxes you pay as business owners and as employers?
So we pay, on the equipment that we purchase, we pay sales tax.
Right.
We also pay our local tangible taxes on the product as well. And then we pay our federal taxes and we pay our employee taxes.
Right. So all those employee taxes, by the way, let's just call those wage taxes. And by the way, we can only take taxes from people that are working. And so we look at a labor force that's not participating at the level it is. And then we say, why is Social Security failing? We say it's the revenue stream. When you don't have people putting money in, it's hard to take money out. But Mr. Benny, I looked at your story, and it's so incredible. Your dad's thought process put your mother and you in business for yourself, right? Yes. Started in your garage.
Yes.
Yeah, my dad's business started in the basement of our house. That's when he used to service our cars before we'd sell them to people. Mr. Vanderwall, you're in the field every day, literally, trying to make a living. But what I am fascinated by is the lack of understanding that the federal government, the state government, our local governments do not provide one penny of their own money. It all comes from hardworking American taxpayers. And if we don't get people back to work, where is this revenue going to come from? And if we don't allow you to be profitable, where is this revenue going to come from? Is there some magic formula out there that I'm not understanding? So this idea that we can invent and manufacture in the United States makes sense. Makes sense. We're trying to do that with Mr. Kind, by the way. But if you all, just the burdens you have as business owners goes far deeper than just owning a business, because you all have a very close relationship with the people that join you every day and are looking to have mutual success. Am I right or am I wrong? And doesn't it make you feel good to make payroll?
Very right.
Yeah. Let me ask you, any of you been able to borrow money from a lender?
Yes.
When things aren't going well?
Well, you always borrow money before you need it.
Yeah, well, you know what? That's a good point. With the anticipation you're going to need it. But my understanding or my experience has been, it's like, you know, a banker will give you his umbrella when it's sunny, and as soon as it starts to rain, we'll ask for it back. And that's because they are driven by regulations. They can't do things they'd love to do to keep us alive. But for all of you to be here today is incredible. Please keep being successful. Keep working with us every day. And please keep hiring people to make sure that we can fund this wonderful system we have, this support system. God bless you for being here. Thank you so much. I yield back, Chairman.
And if you ever come back as a witness, you can just say amen to the chorus of Mike Kelly. So, Ms. Sanchez.
Thank you, Mr. Chairman, and thank you to our witnesses for being with us today. I'm particularly pleased to see some female business leaders on the panel today. And I want to begin by associating myself with the comments of our ranking member, Mr. Doggett. While I'm pleased that we're finally having hearings on discrete topics of tax reform, I'm frustrated that it took more than half a year to get these going, and I would really urge the chairman to consider Mr. Doggett's proposed list of additional hearing topics, because I think it's important that we do our due diligence. Before I launch into further remarks, I just have to say, you know, I've heard a lot from the other side of the aisle about how much government takes from businesses in terms of taxes. And while I think that it's very true that we are working on a comprehensive tax reform, I think it's also important to point out what our government gives for those taxes. So if your business catches on fire, you call the fire department, and that's taxpayer funded. If there, you have a police force that protects your businesses, that keeps your communities free from crime or as crime-free as they can manage. You have a military that is funded through taxes that protects our country from many threats overseas. You have a court system. If there are business disputes, you have a court system that is available to you to utilize because of the taxes that you pay into the system. If you provide goods or services, those travel probably via road or possibly rail, also financed through taxes. I just want to make the point that we don't take for the sake of taking. Our government needs revenues in order to provide the quality of life that you all enjoy in your jurisdictions. And while I appreciate very much the challenges that small businesses face and want to do my part to try to help you, I think it's an unfair characterization to say that government simply, takes more and more in taxes, because it's a fun thing to do or because it's a capricious thing to do. It's a necessary part of living in a civil society. And if you want to see what it's like to live in a jurisdiction that doesn't have infrastructure and government, there are many places around the world that you could go, but I doubt you'd want to be in business there. One of the best parts of my job is when I go back to my district and we do a series of small business walks. And through these walks, I get to know not only some really excellent local restaurants and shops, but some real true manufacturing gems in my district. And when I sit down with those small business owners, I have an opportunity to have honest discussions with them about some of their challenges and some of the problems that they face. And one of the themes that emerges over and over again is the idea of feeling like they've been left out, feeling like the system is leaving small business owners behind. Small business owners tell me they're not looking for a handout. They're simply looking for some fairness because they feel like the deck is unfairly stacked against them. And they don't feel like like we are considering tax reform in a way that really takes their special needs into account. We seem to be focused on the top multinational corporations. And instead of massive tax cuts for uber wealthy corporations being balanced on the back of the true small business owners in my district, they want a little bit of tax fairness, because if somebody deserves a fairer tax rates, it's those businesses that are the backbones of our community, not the multinational companies who are finally bringing back money that they've been stashing offshore. And we shouldn't be giving tax breaks to hedge fund partners so that they can finance another yacht. I heard earlier that you don't own a yacht, but some of the people that we're talking about giving tax breaks to do own yachts, and with the additional money that they're going to be putting back in their pocket, they can buy another one. But squeezing the hardworking people and small business owners in the middle, that has long-lasting impacts on our community. So I want to see a tax reform that relieves the pressure and lets businesses buy that new machine or hire that new worker or put a little bit away towards their retirement. So in the limited time I have left, I want to ask Ms. Wong, we've heard a lot about how there's a great difference between the maximum tax rate for small businesses as compared to the maximum tax rate for corporations. And if what Congress is really trying to achieve is a level playing field for true small business, can you talk a little bit more about that rate differential and why it's important that we talk about tax rates in terms of effective rather than statutory rates?
Absolutely. So the thing to note is that corporations pay that second layer of tax potentially when they distribute their dividends. So if you were to cut the top rate on pass-throughs to be the same as the corporate rate, the effective rate for pass-throughs would actually be much, much lower. And indeed, that's currently why many businesses choose to operate as pass-throughs, because of that tax advantage relative to C corporations. Where the real, I think, imbalance and differential rests is companies like Pfizer that are paying in the single digits because they can funnel their profits offshore.
Thank you. Mr. Renacci.
Thank you, Mr. Chairman. I do want to thank you also for holding the hearing. I appreciate the witnesses, all of them. I also was a small businessman for almost 30 years. I also started out at age 24 with no money. I also went to a bank. I also borrowed, and I also had to sit at the kitchen table and figure out how I was going to make things end. Now, the only difference was I was a CPA. So I was able to understand the tax code and the complexities of it. But I will also tell you that I still, even understanding the tax code, was never really happy because after paying all the bills, I also had that partner that Mr. Kelly talked about, which was the Internal Revenue Service, that I had to make that payment before I could ever make a payment to myself. And I remember many, many times over many, many years never taking a payroll and never taking any money just to make sure the business survived so that the employees were able to get the money. So it comes down to, I mean, I had the ability of being my own CPA. It was funny, I took a business from 2 employees to 3,000 employees. And in the end, people used to come in and say, can I talk to your CPA? And they'd say, well, you are talking to my CPA, because I did understand the tax code. But for you all, there's complexities there. And what I've said all along, that the best thing that can happen is we simplify the tax code. And I want to kind of get into simplification, because I do really think that's important, and how we can simplify it and what we can do better. I know that for me, I filed many tax returns even for myself, and I think the biggest one was over 1,000 pages as well. So, and even I didn't know it. And by the way, I also had many audits in front of the IRS, and I'm not too sure even the IRS agent understood all the pages on the tax return as well, because it is a complicated system. So it does take a lot of time. It does take a lot of energy. And I think in the end, we need to figure out how to simplify. So give me some ideas of what you all do today and where you could see some simplification that would help. I mean, I understand where it might be, but I think my colleagues would like to hear from you. So, Ms. Mears, we start with you and then come across.
Well, as you mentioned, I do have to spend a lot of money in order to make sure that I make the tax deductions. And then at the end, I may not always get, yes, you can deduct that. And so now I've spent the money and trying to figure it out. And then at the end of the day, I can't deduct it, or I can only deduct a certain portion of it, and it still really doesn't do me any good. So it's a very challenging decision process to make when to research something or when to study it or when to trust it. I did have a CPA before. I said I had a new CPA. There's a reason for that. And I ended up overpaying a lot. I ended up having to hire a tax attorney to find out if I could. And again, by the time I did figure that out and I had to go back and amend my taxes, it was 4 years too late. And so I don't think any business, I think we all want to support this country. We all want to partner up with everybody. That's what makes it so great. But no business should fail, and no employer should have to fire someone or not hire someone because they have to spend money on other things involved with it.
By the way, before I end, I do want to talk about taxes because my colleague, Ms. Sanchez, talked about it. The other thing that always drove me crazy, and she mentioned some things, which are police, fire, courts. Those are all paid by local taxes. You know, when you're spending money for the federal government, she only mentioned 2 things, military and roads, and we should take care of our roads and we should pay for our military. But the problem is I always joke, we send $1 to the federal government, they take 10 cents, and we get 70 cents back. And my constituents say, yeah, you're missing 20. I go, yep, and that's the problem, because the government, sometimes we miss that 20 cents too. Mr. Vanderall?
Thank you, Congressman. Appreciate the question. I think for farmers and ranchers, it would come down to really 2 things. First of all, simplification, and also opportunity cost. On our farm, I prepare all the information that needs to go to our CPA, the person that does our taxes, and then he puts them through the mill, whatever that is, and he prints out our tax form, and he gives it to me, and he says, look that over and see if you see anything wrong, and then we'll send it in. Okay. So I try to follow it through. I look at the first page and follow it through to the various pages and forms that are referenced there, and I can't even begin to follow it. I consider myself fairly intelligent, but at the same time, if people can't fill out their own taxes, it's really a sad thing. And that gets me to my other point, is opportunity cost. We could spend that money that we pay our CPA, or the time that I spend.
You got to watch that, paying your CPA.
Upgrading our machinery, hiring more people and things like that. And the CPAs actually could help us run our businesses better rather than figuring out how to handle taxes.
This is Boyd.
Between my mom's tax return and my tax return and the company's tax return, we end up paying about $30,000 a year to get those 3 tax returns done. So that's one of the main things. And there's silly things like meals and entertainment. We can only deduct 50% of meals and entertainment expenses that we have, so the other 50% actually shows up as income on my tax return and on my mom's tax return. That's, sorry.
Well, thank you. Thank you for your testimony. I yield back.
Thank you. Mr. Thompson?
Thank you very much, Mr. Chairman, and many thanks to the witnesses. You guys are doing an outstanding job, and I appreciate the opportunity to hear what you have to say. And I want to echo what has been said by a couple of my colleagues here on the dais. Tax reform is important, and I think there's bipartisan agreement that we need to do tax reform. Personally, I want to see tax reform that does focus on small business and focuses on the middle class. There's been a lot said about, you know, the gazillionaires and the benefits that they get, and I think they're going to get benefits no matter what we do. But the fact of the matter is, working people, small business owners included, I think are a very, very important part of our economy and our country and our heritage, and we need to understand that. I'm pleased that there's been a number of things that have been mentioned, and I hope my colleagues heard the importance that the small business owners place on things like Section 179. We've heard from 2 people that say that they use it. The issue of deductibility of debt financing. The farmer at the dais explained that that's important to him, and I'm sure it's important to other folks as well. The ability to be able to deduct the amount of money that you and your mom pay for your tax attorney or your accountant. That's very much a part of, important part of small business. The estate tax, and I actually didn't know if I was going to mention it, but Mr. Larson put me on the spot. I believe we do need to do something with estate tax. I don't believe repealing it is the way to go, and I have a particular interest in how estate tax treats small business owners. And especially family-owned businesses. And I've got the legislation that Mr. Larson talked about is my bill that would exempt family-owned farms and small businesses from paying estate tax if they inherit the family farm or the family business and continue to operate it as such. If you sell it and move to the Hawaiian Islands, then pay your taxes just like everybody else. You pay taxes if you make your money working. You ought to pay taxes if you make your money because of a transfer of wealth from someone else. And as Ms. Sanchez says, I spend a lot of time. I am a small business owner, by the way, and a farmer. So we call them ranches where I live, but so I am one. But I also spend a lot of time when I'm home meeting with my small business people and taking those tours. Something that I hear a lot about is a qualified workforce, and that goes. It includes higher education, it includes career training, and it includes immigration reform. And that's something that this Congress should be dealing with. And I don't know how you all do in the Dakotas, but I know where I farm and the people that I represent, immigration is a huge, huge issue for us. And I think it's the same across all of the states. And those would all be issues that would help small businesses. So thank you for what you're doing. Thank you for your input. Please keep sharing with us the things that are important to you. And I have a question for Ms. Hong. It's come up a couple of times now, this experiment that was done in Kansas. And the elimination of all tax on the pass-through business income was a big part of Governor Brownback's issue. And as I understand it, they found out that this did take money away from all the things that all the services that government provides: education, highways, clean air, cops, firefighters, you name it, to the point where they had to repeal it and had to override a veto to do that. Can you add any more insight on that disastrous experiment?
I think the genesis of that disastrous experiment was the idea that those cuts wouldn't have to be made at all because there was a promise of immediate economic growth that would be economic nirvana, I think, was what was promised.
Similar to what the president promised by doing tax reform that would be the biggest and the best since Ronald Reagan.
Indeed, and in fact, responding to some of the very same people who have advised Governor Brownback to do those tax cuts are advising the president on his plan. So I think that economic nirvana didn't happen. In fact, Kansas lagged the country in growth. That meant the budget deficits that, as you say, put pressure on services, investments.
All the services that small business owners, from cops to highway, depend upon.
Right, delaying road repairs, schools having to go to 4-day weeks to close out the year, schools closing early. These sorts of cuts have short-term and long-term damage on communities and businesses.
Thank you. Thank you, Mr. Chairman.
Ms. Nome.
I think in response to the situation that happened in Kansas, there was several other things and factors that were occurring in that situation as well, rather than just the tax situation. So I think we all can agree that that was a little bit more complicated than just tax policy that hit that state. And history would show that that doesn't prove true in other situations in other states that have taken the exact same action. Mr. Vander Wal, I wanted to visit with you a little bit because you've spent your life in agriculture. I've spent my life in agriculture. And I think the one thing that happens often is people don't understand the volatility that that industry faces. It's not often we get a farmer testifying before the Ways and Means Committee, much less one from my home state, so I appreciate you coming. But we as agriculture producers, borrow money to buy land, then we go back to a bank and borrow money to buy our machinery to farm that land, and then we go back every single year and borrow money again to buy seed, fertilizer, and chemical. And the way I explain it here in DC is that then we take that seed, chemical, and fertilizer, we bury it in the dirt, and we hope that that fall we can go back and pick up something to pay our bills. And so many of those things that impact our income every year are out of our control. If the sun doesn't shine, if it rains too much, if it doesn't rain at all, if you have some kind of a pest problem or other thing that impacts your harvest, it takes a lot of faith to be a farmer, I believe, in this country, but we do it because we believe in providing food and safe and affordable food for this country. But I'm very concerned about the tax code because of the amount of money it takes for producers and small business owners to comply with the tax code. It's 6 billion hours a year that we spend in this country paying and spending time figuring out our taxes. And over $6 billion, I believe, small business owners pay CPAs to help us pay our taxes correctly. So that's all lost productivity that could go into these businesses. I'd like you to talk a little bit about the burden this places on your son, who wants to, I'm worried about beginning farmers. The average age of farmers in this country is in the late 50s. So we don't have a lot of young people going into the business because of the volatility and factors out of their control. So talk about how a permanent tax code, because there's people on Capitol Hill that are advocating for temporary tax cuts. And I don't believe that that gives us the certainty we need in some of these industries that are so volatile like agriculture. Often people think about highly leveraged industries, they think about energy, other areas, but agriculture is one of them. And tell me about the challenges that your son faces with being highly leveraged, volatility, how we need permanence in the tax code, and what the uncertainty of temporary would do to him.
Certainly, Congresswoman Nome, thank you for the question and appreciate the invitation to be here. Yes, it does make it very difficult. My son is 28 years old, and like I said, he's got a baby girl, and he's hoping to expand his cow herd. He's farming with us right now, but he'd like to expand his own operation as well. Just take a step back to our family corporation. It's a C Corp that was set up in 1970, and nowadays that's not the way to set up a farm operation, but LLCs weren't invented back then. Mm-hmm. So what we're going through right now is a process where we're trying to buy out one half of the family, because my father and my uncle still actually own the company, and try to buy out one half of the family, and capital gains taxes are just a huge wall in front of us. It's going to take so much cash out of our operation that we don't even know if we can make that work long term. So that's what he's facing down the road. You talk about estate taxes. I mentioned that we're underneath the threshold right now for that. But who knows? My son's a very enterprising person, and maybe he and his daughter will get above that threshold someday. And that's still going to be a family farm, no matter how big it is. 99% of the farms and ranches in this country are family-owned and operated, and that's one of the biggest things about that that brings it down to a personal level.
Well, I think that's what you hear. You've heard testimony today here as well about the death tax and how it should continue to remain in place. And you know my personal story with that. When I was still going to college, my dad was killed in an accident on our farm. And we ended up getting hit with the death taxes very substantially. In fact, we didn't have any money in the bank. We had land, we had cattle, we had machinery, but no money in the bank. So we ended up taking out a loan, and it took us 10 years to pay off those death taxes, which is double taxation. It's an unfair tax. And even though you say you're underneath the exemption, I'm guessing you spend money on estate planning. And even your son is thinking about who he's going to pay to give him expert planning to make sure that he doesn't have to pay death taxes to put him into a situation where he's burdened under even more debt.
Yes, that's a great point. Who knows what the future holds? He's going to do the best he can to build a business, and knowing him, he might be worth $10, $20 million someday.
Well, and today it's taking more and more acres for one family to be supported anyways. So maybe my grandpa bought land for $50 an acre, but it might be worth $10,000 an acre today, and that's why you hit that exemption so much quicker. Plus, I can't get by on farming 800 acres anymore. I've got to farm 1,300, 2,000, 3,000 to pay your bills now. So that's why that exemption, it just doesn't meet the needs that we have, and the entire tax should be repealed. With Mr. Chairman, I yield back. Thank you.
Ms. Delbeni.
Thank you, Mr. Chairman, and thanks to all of you for being here with us today. First, Mr. Chairman, I'd like to submit for the record a letter from the breweries and wineries, many small businesses in my state of Washington, with their feedback on tax reform.
Without objection, so ordered.
Thank you so much. My district in Washington State is home to over 3,000 farms that grow a variety of fruits and seeds and vegetables, as well as a number of dairy farms. And I definitely know how critical a vibrant agriculture sector is to the U.S. economy and to the local communities throughout our country that farmers help support. And I also know that farming is an incredible capital-intensive and unpredictable undertaking with large upfront investments that can take a long time to pay off, and affordable financing can be as important to a farm's success as the weather, the sun and the rain. So, Mr. Vanderwall, I'm hoping you can elaborate a little bit more on what mechanisms are used by America's family-owned farms to finance investments in their operations, what role interest deductions play in making that financing affordable, and why it's so important, and what's unique about small agricultural businesses that this committee should keep in mind as we move forward with tax reform.
Thank you very much for the question. I tried to make some notes here, so I'll get them all. First of all, investments. You know, we're kind of left with going to the bank for financing. We don't get the attention of Wall Street investors, venture capital type people, because they look at the returns that farming makes. And like I said in my original testimony, the returns that we get on a return per investment isn't very good compared to a lot of different businesses and industries. As far as interest deduction goes, like Ms. Noem said, everything we do a lot of times takes borrowed money until you really get your feet on the ground and expand your operation. And that's a very important part. Farm management specialists tell us that you can use up to 25% of your net income to pay interest. And that's a lot of dollars. And so that's why that's so important to us to be able to use those dollars that aren't taken by the government to build our businesses.
Thank you. Also, I wondered if you'd elaborate a little bit about the importance of like-kind exchanges to farmers. I know we often talk about this in terms of real estate, but I also wanted to ask you about equipment, because we know that now you might be wanting to upgrade farming equipment, especially as there are newer technologies. You might have a tractor that has, that's internet connected, that might be able to provide feedback to help you optimize your crop yields. And so can a 1301 exchange help a farmer make that upgrade, and how would that happen?
Yes, that is very important for us. I think it's more used in land trading, or I shouldn't say trading, but land transactions. Think about all our cities with urban sprawl, where they're expanding out into farm territory. And there are farmers who literally get pushed out of existence by this kind of activity. So when they can use a 1031 exchange to sell that land that's close to a city and then go out farther out in the country and buy land, that enables them to keep farming rather than having to just sell out their land and go find a different enterprise. So it is very important. Machinery, it is used to some extent, I think a lot of times by non-farm companies, more so than farms, but it is something that's used and it is important in making those transactions.
Thank you. Ms. Wong, in your research, we've talked a lot about what we can do to help small businesses. In your research, you pointed out very plainly that only 0.003% of all estates, that's 3 out of every 100,000 people who might pass away this year, will be small businesses or farm estates that owe any estate tax. And we've talked a lot about the estate tax, but I wanted to know what your feedback would be, especially for small farms, true small business owners who aren't part of that top few, who want to make sure that in tax reform we look at what we can do to benefit small businesses and what things you think we should prioritize.
Thank you. I've heard a lot about the need for simplification and permanence, and I think those are all really important areas to look at within tax reform. I think my main concern, however, is that it's a little bit premature to be talking about some of these really important pieces if we've set ourselves up in a framework where small businesses, small farms, ordinary American workers could in fact be picking up the tab for large tax cuts that are flowing overwhelmingly to people at the very top and corporations that are already paying very low rates. So that is my overarching concern with tax reform, that we first set ourselves in a situation where we're not doing harm, and then we can talk some more about these simplifications, permanence, that would all be very important.
Yeah, I'm sorry, I ran out of time. I yield back, Mr. Chair.
Mr. Holding.
Thank you, Mr. Chairman. I'll remind our colleagues that over the past couple of years, we've held many hearings and we've had meetings with our constituents where we've heard from witnesses, constituents, and stakeholders across all business sectors, and they all say the tax code is outdated, overly burdensome, and places U.S. companies at a competitive disadvantage. And yet, for 30 years, we have not managed to overhaul the tax code. With a worldwide tax system and the highest corporate tax rate in the industrialized world, which, as our witnesses have pointed out, there's even a higher rate for small businesses, pass-throughs, we're continuing to slog along under the status quo, all while letting foreign countries use our broken code against us to attract business investment and once American jobs that were once here in America. So our current worldwide system of taxation makes it more attractive to be headquartered in a foreign tax jurisdiction, so American businesses, in order to remain internationally competitive, are forced to move their business operations and jobs overseas. And further, not only does our broken tax code encourage jobs to be moved overseas, it at the same time discourages individual Americans from competing for jobs in foreign countries due to our abnormally unique system of citizenship-based taxation. So now, Mr. Chairman, we have a prime opportunity this session of Congress to reform the code, and it's imperative, I think, that we act quickly to put in place a new code that allows businesses and citizens to equally and adequately compete on the global stage. So, Ms. Bonique, I'd like to address a question to you. I was listening to your testimony. In your testimony, you talked about the need to level the playing field for American businesses. And as you are the owner of a business that serves international markets, I'd like for you to describe how our tax code has impacted you as compared to your foreign competitors and how they're in an advantage.
Well, the complications with our tax code do make it a little more difficult. For example, we pay estimated taxes every quarter. And so you have to pay your taxes in June for the second quarter, June 10th. So I'm guessing what I'm going to make in June and what my taxes need to be paid for that point. So that's one of the things that's an issue. As far as the foreign competition goes, we are seeing more and more furniture that's coming from, especially from Asia. And the problem with that is that obviously their workforces get paid much less. They don't have any environmental issues that they deal with because they just pollute everything. But those products come into our country and there's no tariffs or taxes on them at all. And so they can bring in a product that is much lower cost than what I can manufacture it here in the United States. And that's one of the things that we have to compete with day in and day out.
So what you're pointing out is those foreign competitors, when they're exporting goods to the United States, they're not paying income tax in their own jurisdiction, and there's no, as you point out, taxation of that good to put it on a level playing field with the taxes that you're paying here in the United States. So, you know, you're paying tax, they're not paying tax. Exactly. So when you're coming up with the cost of the goods and the profit, you're at a distinct disadvantage. Well, I want to thank all of you all for your testimony here today. You know, I believe every member of this committee and every member of Congress owes it to you and the more than 28 million other small businesses in this country to get permanent pro-growth tax reform done, and I hope you hold us to that. So thank you, and I yield back.
Mr. Marchant.
Thank you, Mr. Chairman. Ms. Bainick, you're a fellow Texan. Welcome to Washington. We're also privileged to be in a state that has no state income tax,
which would very much appreciated.
Really complicate your business, I'm sure. I don't know about South Dakota, and no. Okay, so we've got a very privileged panel today. All come from states with no state income tax. So you can see how exasperating this would be if your businesses had another layer of tax added to it. And most of the states that are represented in Congress have that additional layer, and it makes a federal tax reform for small businesses even more important. I think Mr. Vanderwall has told us you operate as a C Corp. Do you mind telling us, the other two witnesses, how you operate?
My current business is an LLC, and I operate as an S Corp.
Okay.
We're an S Corp.
So your accountant advised you how to form those. Is there a particular reason why either of you or both of you decided on that?
When we originally started the company, we started as a C Corp because that's what the lawyer told us to do. Mm-hmm. We didn't really understand the difference, and it wasn't until we actually took the company public in '97 and then took it private again in 2001. When we took the company private again, we formed as an S Corp because at that point, we knew that that was a much better tax position to be in, to establish the company that way. So we've been both, but the S Corp seems to work better.
I agree. The S Corp definitely works better for us, and we were advised by our CPA and attorney as we set it up. I actually had a bad experience with a C Corp when I purchased a distributorship, and so I also recognized that if I wanted an exit strategy, trying to sell it out, it would also make it a lot more challenging for it to be a C Corp instead of an S Corp. So I was looking at my exit as well.
So to each of the business owners, what is the single most frustrating thing that you deal with on a regular basis as it pertains to the tax code? What is the thing that drives you the craziest about the tax code?
I guess the simple question or answer would be to have to depend on other people to hope that they're right, and having to spend money not knowing if that's really going to give me a return on it because it's so challenging and difficult. And the fact that I have overpaid on taxes due to that makes it even more frustrating and scary.
So the complexity of it.
Complexity.
Mr. Van Wall.
Yes, sir. I would say, first of all, the tremendous amount of money and cash that transferring our operation from one generation to the next is going to take out of our operating fund, and also the incredible complexity of the tax code.
I think the complexity is the biggest issue. I always thought that accounting was very black and white, And it wasn't until I started dealing with the tax accountants that I found that there's this whole gray area. And it's, do you categorize it as this or do you categorize it as that? And again, when I look at my tax return for a certain certification last year, I had to be able to prove what my individual income was versus any income that my husband had on our tax return. And I had to go back to my accountant and have them do a spreadsheet, because as an S-Corp, there are things like the R&D credit that ends up on my tax return. Well, I don't know if that's income or a deduction. So it's just so complicated that you can't even understand what this document is that you're signing, and you're counting on other people to put this together, and then you sign it in hopes that you don't get audited or get in trouble or have, you know, something bad happen.
And it really exasperates things when Congress has to meet every 2 years and renew certain aspects of the tax code through extenders, which this committee does not enjoy doing. It's part of. And would each of you mind telling me, this panel, who are your largest customer base? Are they big corporations? Is it other small businesses? Who do you sell most of your stuff to?
My largest customers right now are state, city, and local government agencies. So I do uniforms. So any police officers, fire and rescue, public safety.
Ms. Vanwell.
We feed most of our corn to our cattle through our feedlot. Our soybeans go to a local processor that we are a very small part owner in, and the cattle will go to the major packers.
About 20% of our business is actually with the federal government. We have a GSA contract, so we love the fact that the government does spend some money on buying furniture. The rest of it is primarily Fortune 500 businesses.
Thank you.
We'll now hear from first-time caller, long-time listener, Ms. Wilarski.
Thank you, Mr. Chairman. Thanks to the panel for being here as well. This has been such a fascinating discussion. I am so grateful, especially the three of you that are running small businesses came in all the way in here, as Representative Kelly talked about. I am fascinated, though. I have to just bring this to everybody's attention. In Ms. Wong's written testimony, figure 2 here says, Trump-like pass-through rate cut would not benefit low and middle income Americans. And I'm sitting here listening to this testimony, and I'm thinking, this is one of these issues where it looks like we can't see the forest for the trees because of this glaring 1%. So I want to ask all three of you that are actually running businesses, how many employees do each of you have? Ms. Mears, just start here and just go down the line.
Total right now is 15, as I just hired 5 in the last 6 months.
Mr. Vanderwall.
We employ 5 family members and a couple of part-time college kids in our farm.
Mm-hmm. Ms. Bonet.
We have almost 90 at the factory in Texas, and then we have independent reps across the country and in Canada, so 60 more that we pay on a 1099 basis.
Are any of your employees in a category that would be in that 1% of rich Americans? No.
Neither are we.
Would tax reform allow you to pay more people, more money, hire more people? And if you hire more people, do you think you'll hire people that are in that 1% rich, or are they going to be average middle-class Americans?
Average middle-class Americans.
I think that one of the things that we miss when we sit on these committees is, all the statistical information that comes out, the can't see the forest for the tree kind of things. But, I mean, what I hear today from all of you that have employees that you're actually engaged in this every day is that a pass-through rate cut raises all ships. And when all ships raise in this country, that's how we get the most efficient, accurate, increase in money and productivity in the lower and middle income in this country, because all ships rise. So, as we've been looking at this in a way to come in and be the most benefit to you, I see this headline as being very, very blinded to what we've heard here today, that we're not having a discussion about the House budget plan, the Trump-like tax reform plan, we're not having a discussion about the 1%. We're talking about energizing a growth factor in this country that will literally spark an economy where all ships rise, and they do it quicker and not slower, because it answers, what I think it does is answer the question is, and what I've heard from you today, is this tax reform plan has to be permanent. This tax reform plan has to raise all ships in this country. It can't be a, concentrated on 1%. I think we've proven today in all of your testimony the reflection of the hard work, the risk that you take. The risk that's taken by small businesses in this country is unparalleled because there is no backstop. There's a backstop to everything that we do here, and it's taxpayers, hard-working taxpayers' money. But the backstop that you seem to be asking us for is a tax reform that works for you, not against you. It works for your future employees, not against them. It allows all ships to rise in this country, and that the expediency should be on our part to urgently move this legislation. Would that not be the summary of what we've heard today?
That would be wonderful.
I very much appreciate it. I appreciate your hard work. Thank you, Mr. Chairman. I yield back.
Mr. Rice. Thank you, Mr. Chairman. Mr. Vanderwall, you raise corn and soybeans and cattle, from what I understand. Is any of your product exported?
Yes, I'm sure it is. We don't track it because a lot of our beef goes to the major packers, but certainly that is. There are certain markets that we cater to that are for exports, like implant-free and things like that. Corn is also something, some goes to ethanol plants, but dried distillers grains are exported as well.
You know, we had the chairman of Archer Daniel Midland here a couple of weeks ago, and he was talking about the fact that the Midwest of this country, where you're located, provided 80% of the world's grain exports 30 years ago, and certainly technology's improved around the world, but our tax code makes us very uncompetitive in the world. And my goal in Congress, my goal in tax reform, tax reform is one of the primary reasons I came to Congress, is to make our country competitive. Because I think American workers and American companies can compete with everybody in the world if we're on a level playing field, and we're not. So when we're competing against Ukraine and Brazil on grain exports, and we were providing 80% 30 years ago, and now Ukraine and Brazil have border adjustment through value-added taxes. So their grain exports are 15% cheaper than your grain. Do you think China is going to pay 15% more for your grain than they are for Ukrainian grain or Brazilian grain? So when we look at the fact that our market share worldwide has dropped from 80% to 40% in the last 30 years, really shouldn't be surprised. Ms. Bainick, is that right?
Yes.
Do you export?
A little bit to Canada. Most of our other exports go to Air Force bases and Army bases across the world, but those are really still going to U.S. soil just because they're in Japan or Germany.
So you're having to pay a border adjustment when your product goes into Canada, which makes your product more expensive compared to Canada furniture makers, right?
Yes.
Which puts you at a competitive disadvantage. I think Canada's border adjustment's about 9%, if I recall. So you're at a 9. So either you've got to accept 9% less for your product, or you're going to get that much less sales. So that you're at a huge disadvantage. Do you compete in the American market against imported goods?
All the time.
Yeah, and they're coming from China and all over the world, and they have, China's border adjustments between 15 and 20%. So you're at a 15 to 20% disadvantage because we have a tax system, purely income tax system at a very high rate that puts you at a huge disadvantage. It's fascinating to me that you've been able to build this business as well as you have and continue to compete against this, in my opinion, unfair burden that's been placed on you by our tax code. What if we did away with that 15% disadvantage? What do you think the result would be on your business?
I think that in some ways it would be very helpful. I assume you're talking about the border adjustment tax.
Yeah, I mean, well, let's say we did it through any mechanism, through a VAT, through a BAT, through anything else. We just eliminated the 15% price differential where you're competing with Chinese goods. Would that affect your sales?
I think from the overall standpoint that would be good. The issue that we have is that because we've made it so non-competitive in the United States, there are some things that you can't buy in America anymore, like the wheels on your chairs, the casters. You can only buy those pretty much in Asia anymore.
So, but if it became competitive in the United States again, you think people would start making wheels in the United States?
I think so. I think it just has to be phased in so that you give companies the time to actually bring those jobs back and to manufacture those products here.
Ms. Mears, do you export?
I do not.
Do you sell to people who export?
I do not.
Who do you sell to?
I sell to mostly local city, state, and county governments, and then I have private companies that wear uniforms as well, so clothing, so it all stays with
Do those people buy uniforms from, say, China or from other places in the world?
Absolutely, yeah. And to try to get an American-made product and be competitive is almost non-existent.
Because our tax code puts you at because we don't have border adjustment, we have a pure income tax, higher rate, you're at about a 15% disadvantage. Let me ask you this. If you could cut your prices by 15% and lower your cost by 15%, would that affect your sales?
Absolutely, and I think a lot of people in my industry, on the clothing industry, we do have the USA, made in the USA, and we tried to do it, but consistently it is always a higher price, and that is, if you talk to the customers alone, that's their, oh, it's made in the USA, okay, well, I'm gonna have to pay a little bit more. Some are like, okay, I will, but then others are like, no, it ends up being on the price, especially at the end of the day when you're doing a bid, they look at that bottom number. And when yours is a lot higher because you can't compete with the cost of goods and you're just trying to make a margin, it is.
Well, I appreciate all y'all being here. My sole focus is making our country competitive. If we go through this exercise of reforming our tax code, which we desperately need to do, and we don't make us the most, the result is not that we're the most competitive economy in the world, and shame on us. Thank you very much.
Thank you all. Let me make a couple of observations and kind of clean up here as Chairman's prerogative. So first of all, thank all four of you for your time and your willingness to engage us. My request of you is that when you go back and you have a discussion with people, tell them, you witnessed something very interesting. That was a bipartisan civil discussion where people brought different perspectives. It didn't involve anybody snarling at one another on television or questioning one another's motives. What a refreshing, what a delightful experience. So thank you very much for coming. Let me make a couple of observations. I think that there are some things that are going on in this tax discussion that are actually fault lines, and you can sort of sense them, and we've got to figure them out. The American public has to figure these things out. One fault line is, do we have a permanent tax code or don't we have a permanent tax code? And for the small business owners that we heard from today, they all said, yeah, give us permanence. Ms. Huang said, give us permanence. So but there are voices out there that are sort of a little bit of a siren song saying, oh, just deal with a temporary thing and get permanence down the road. I'm of the view that we're at an inflection point right now. We've got to deal with this, and let's have a permanent code. The other issue that's got to be sorted out, and it sort of it raised to the surface, not explicitly, but you can get this sense that there's this notion of some folks in the tax debate view the economy as a fixed pie. That is, if somebody does well, it has to come at the demise of somebody else. It can't be that somebody's doing well because they've brought a new product to the marketplace or something's competitive through virtue and hard work. It has to be a nefarious enterprise. We've got to sort that out. That is not in sync with who we have been historically as a people. I mentioned this in my opening statement, and that was, we have historically not been a jealous people. And I'm telling you, that is really part of the charm of the American economy. And we've got to sort that out, because if this becomes a zero-sum game debate, it becomes really unsatisfying. It just doesn't end well for anybody. And so enough said there, but we've got to sort through these two fault lines. These larger themes, though, particularly as it relates to the blueprint, even Mr. Doggett in some of his initial comments, he would find no objection in these things. He may put an emphasis on other things as well, but he would find no objection in several of these themes. First is, we're proposing real growth, growth that is buoyant. I see my friends from Local 17, the insulators from the Chicago area that are here today. So and I visited their facility a couple weeks ago. What do their members want? Well, what their members want is an economy that's growing, that's expanding, that they can go out and insulate things and so forth. So growth matters, and the ripple effect throughout the whole economy is incredibly profound. The second thing is we need a simpler code. I mentioned this earlier, but this notion that somehow we view the tax code as something that is just insurmountable is a false claim. We can deal with this. And two of you both cited the level of complexity at the beginning of your businesses that became really overwhelming and could have put you under. So let's get to that. We didn't really have this larger discussion of one of the third themes, and that is we've got to deal with the erosion of the tax base. That is, when customers leave, it's devastating. Or when we import deductions into our tax framework, it's devastating. We don't have to live like this. Let's fix it, and let's deal with it. And then the fourth thing I mentioned earlier, and that is permanence. So I think that we need to navigate through these fault lines. We need not be distracted by all the drama that this town entails, to sort of turn off the televisions and just focus in on driving towards these conversations. And I think a couple of things. One thing that's important is we are hearing from small businesses who are concerned about their ability to deduct their interest on business expenses. Message received. We are actively working on that, and I think that we're gonna get to a good place on that. We're also very mindful of some of the concerns in terms of anti-abuse rules on the pass-through treatment. Message received. We need to understand that so that it can't be manipulated. And I get the irony that we're advocating a level of complexity while we're arguing for simplicity. I get the joke. I got it. But we've got to navigate our way through that. There's also some insight that came from Mr. Thompson, and I don't want to quote him in his absence, but I'll sort of paraphrase. He said the super wealthy are going to do well no matter what. And hey, and the super wealthy are doing well today. So this notion that, to follow up on Ms. Wolarski, let's not be blinded by where they are. Yeah, let's be attentive to it. Let's be mindful of it. But let's also realize that we've got a real responsibility for folks up and down the entire economic chain. And then I just got to tell you, I come from the state of Illinois. And the state of Illinois recently made a very bad decision. The state of Illinois said rather than dealing with the underlying problems in the state budget, the legislature, over the governor's objection, jammed through a massive income tax hike. And here's what happens. People are leaving Illinois, and they're going to places like Texas. They're going to places that are far more attractive from a tax point of view. So we've got to be aware of the holistic and the totality, the holistic nature of this tax debate. And let me just make one final point. If healthcare has an impact on 1/6 of the economy, which it does, tax reform has an impact on 100% of the economy. And if you're having an impact on 100% of the American economy, you are having an impact on the entire globe. So it is not lost on the members of this committee on both sides that the nature of what we're talking about, the opportunity here to do something really transformational from a generational point of view, is incredibly significant, which is why your insight in particular today, you witnesses, all four of you, we're really deeply appreciative, and we thank you. And with that, almost, hold on. Please be advised, because I know you're just waiting with bated breath, that members will have 2 weeks to submit written questions to be answered later in writing. Those questions and your answers will be made part of the record. And with that, the subcommittee stands adjourned.